Hello, and welcome to our video on how to start bookkeeping for small business. Bookkeeping is an essential task for any small business owner, but it can seem overwhelming if you're not familiar with the basics. In this video, we'll walk you through the steps to get started with bookkeeping, from setting up your chart of accounts to choosing bookkeeping software and hiring a bookkeeper. Whether you are a new business owner or just looking to improve your bookkeeping practices, this video is for you. So let's get started. Step 1. Understand bookkeeping basics. Bookkeeping involves recording all financial transactions, including sales, purchases, payroll, and expenses. These transactions are recorded in a ledger, a record-keeping system used by accountants and bookkeepers. A ledger can be in physical or digital form and can be as simple as a notebook or as complex as a cloud-based accounting software. Bookkeeping is critical because it helps you keep track of your business's financial health, prepare financial statements, and file your taxes. Proper bookkeeping practices also enable you to analyze your business's profitability, identify areas of improvement, and make informed decisions. Step 2. Set up your chart of accounts. A chart of accounts is a list of all the accounts used to record financial transactions. This list includes asset accounts, such as cash, accounts receivable, and inventory, liability accounts, such as loans and accounts payable, and equity accounts, such as owner's equity and retained earnings. You will also need to set up revenue and expense accounts to track your income and expenses. When setting up your chart of accounts, consider the specific needs of your business. For example, if you are a service-based business, you may need to set up separate accounts for different types of services you offer. Similarly, if you sell physical products, you may need to set up separate accounts for different product lines. Step 3. Record your financial transactions. Once you have set up your chart of accounts, you can start recording your financial transactions. This involves entering each transaction into the appropriate account in your ledger. For example, if you receive a payment from a customer, you would record the transaction in your revenue account. If you purchase supplies for your business, you would record the transaction in your expense account. Recording financial transactions accurately and timely is crucial for proper bookkeeping. Make sure to keep receipts and invoices for all transactions, as they serve as proof of the transaction. Step 4. Reconcile your accounts. Reconciliation is the process of ensuring that the balance in your ledger matches the balance in your bank account. This involves comparing your ledger's balance to your bank statement and identifying any discrepancies. Reconciliation helps you catch errors, identify fraudulent transactions, and ensure that your financial statements are accurate. Step 5. Generate financial statements. Financial statements provide an overview of your business's financial health and help you make informed decisions. The three primary financial statements are the income statement, balance sheet, and cash flow statement. The income statement shows your business's revenue and expenses over a specific period. This statement helps you see if your business is profitable and identify areas of improvement. The balance sheet shows your business's assets, liabilities, and equity at a specific point in time. This statement helps you understand your business's financial position and identify potential funding sources. The cash flow statement shows the cash coming into and going out of your business over a specific period. This statement helps you see if your business has enough cash to pay its bills and invest in growth. Step 6. Choose bookkeeping software. As your business grows, it may become challenging to manage your bookkeeping manually. Fortunately, there are many bookkeeping software options available that can simplify the process. When choosing a bookkeeping software, consider your business needs, budget, and ease of use. Some popular bookkeeping software options for small businesses include QuickBooks, Xero, and Wave. These software options offer features such as automatic bank feeds, invoicing, expense tracking, and financial reporting. By using bookkeeping software, you can save time, reduce errors, and gain access to valuable insights into your business's financial health. Step 7. Hire a bookkeeper. If you find that bookkeeping is taking up too much of your time, or you are not confident in your bookkeeping skills, consider hiring a bookkeeper. A bookkeeper can help you with all aspects of bookkeeping, including setting up your chart of accounts, recording financial transactions, reconciling accounts, and generating financial statements. When hiring a bookkeeper, consider their qualifications, experience, and cost. You can hire a bookkeeper as an employee, independent contractor, or bookkeeping service. Ensure that the bookkeeper you hire is knowledgeable about bookkeeping for small businesses and understands your business's specific needs. Step 8. Stay organized. Good bookkeeping requires discipline and organization. Make sure to keep all your financial documents in a safe and organized place, such as a filing cabinet or cloud storage. Keep track of your receipts, invoices, and bank statements, and reconcile your accounts regularly. Set up a regular bookkeeping schedule to ensure that you stay on top of your financial transactions. By staying organized and disciplined with your bookkeeping, you can save time and avoid errors. Good bookkeeping practices can also help you identify potential financial problems early and make informed decisions. Step 9. Set a budget. Bookkeeping can help you understand your business's financial health, but it's important to have a budget in place to guide your spending decisions. A budget can help you plan for expenses, set financial goals, and avoid overspending. When setting your budget, consider your business's income, expenses, and cash flow. You can use a spreadsheet or bookkeeping software to help you create and monitor your budget. Step 10. Separate personal and business finances. It's essential to keep your personal and business finances separate. This means opening a separate business bank account, using a separate credit card for business expenses, and not mixing personal and business transactions. Keeping your finances separate can make bookkeeping easier, ensure compliance with tax laws, and protect your personal assets from business liabilities. Step 11. Monitor cash flow. Cash flow refers to the movement of money in and out of your business. Monitoring your cash flow is important for ensuring that you have enough cash to cover expenses and pay bills. You can monitor your cash flow by creating a cash flow statement, which shows the inflow and outflow of cash over a specific period. By monitoring your cash flow, you can identify potential cash shortages and take steps to prevent them. Step 12. Review financial statements regularly. Financial statements, such as the balance sheet, income statement, and cash flow statement, provide valuable insights into your business's financial health. Reviewing these statements regularly can help you identify trends, potential problems, and opportunities for growth. You can use bookkeeping software to generate financial statements automatically or create them manually using a spreadsheet. Step 13. Stay compliant with tax laws. Small businesses must comply with tax laws at the federal, state, and local levels. This includes filing tax returns, paying taxes, and keeping accurate financial records. Failing to comply with tax laws can result in fines, penalties, and legal problems. It's essential to stay up to date with tax laws and regulations and consult with a tax professional if necessary. Step 14. Seek professional advice. Bookkeeping can be complex, and it's okay to seek professional advice when needed. You can consult with a bookkeeper, accountant, or financial advisor to help you with bookkeeping tasks, financial planning, tax compliance, and other financial matters. Seeking professional advice can help you make informed decisions and avoid costly mistakes. And that's it for our video on how to start bookkeeping for small business. We hope you found this information helpful and that it has given you a better understanding of bookkeeping basics. Remember, good bookkeeping practices can help you save time, avoid errors, and make informed decisions for your business. If you have any questions or comments, please leave them below. And don't forget to subscribe to our channel for more business tips and advice. Thanks for watching, and we'll see you in the next video.